and talk about a special segment. It is the jewelry space, and the special segment, obviously, Value Plus, that we keep getting to you time and again on Halftime Report. Why are we looking at the jewelry stocks? Because 2 days, 2 updates came in. This morning, there was Kalyan Jewellers, and yesterday morning, there was Titan. If you look at, the intraday chart of both Titan as well as Kalyan Jewellers, you would see that Titan is actually doing well. After having seen some gains in yesterday's trading session as well, it is still holding with gains of almost 1.5%. Kalyan Jewellers, on the other hand, gained about 4% this morning, opened about 4% higher this morning, and from there has seen a bit of a slide and currently is marginally in the red, the lower end of today's trading range. Is there a difference in their jewelry updates? Well, yes, there is, in the sense that Titan jewelry business grew at 26%. Gold sales grew by about 24%. Studded sales grew at 21%. So if you look at just their third quarter update coming in for Titan, it has been fairly strong, led by gold sales. Gold prices were higher. Kalyan Jewellers, on the other hand, the India business grew at 41%. Overall revenue growth at 39%. Same-store sales growth at 24%. Kalyan, by all means, for the last many quarters has been growing much higher than Titan. So why is it that the stocks are lower? Well, here's the reason. If you look at the last 1 year, Kalyan Jewellers is up 106%, Titan is down 5%. If you look at the valuations as well, Kalyan Jewellers last year was trading at half the valuations of Titan. But by this outperformance of Kalyan Jewellers is actually trading at a premium to Titan when it comes to the very near term. FY25 price to earnings, Kalyan Jewellers is 103 times, Titan is 101 times. 1 year forward as well, if you look at the growth that Kalyan Jewellers is posting, which is higher than Titan, they're trading at around 67 times, whereas Titan itself is trading at around 70 times. So that explains the divergence in the stock price move, despite the divergence in the growth parameters that the company has reported as well. But that's not to take away from the larger point that jewelry stocks are likely to do well in the third quarter, and that's what we're seeing. The likes of Senco, Thangamayil, P.N. Gadgil, even some of these others, the TBZ and PC Jewellers. Why is that? Because the third quarter will be strong, as it was expected to be. There was festive demand, there's wedding season, the rise itself in gold prices will do extremely well for them. That's the good part. What is it that we need to watch out for in the third quarter? One is margins, because there is higher salience of gold. Gold is typically a lower margin product. So could there be margins sustaining at a time when everyone is expanding, there is competition, and at the same time there is lower demand for studded jewelry because of lower diamond prices, the influx of lab grown. So revenues for all the companies will look extremely good. Will that translate into margins, etc. or not, is something we'll be watching out for. And for the smaller players who don't have a lot of unhedged or rather hedged gold, then there could be an inventory gain coming in because of the gold price rise as well. So that is one factor that I'll most definitely keep an eye out on. So that's about the jewelry space. But let's go back to the brokerage verdict and a lot of the brokerage related stock price moves